Hello and welcome to another ACY Securities daily report video. My name is Alistair Schultz and I'm going to be your host through today's trading journey. Now, I'm looking at a few things today. The first of those things is the Reserve Bank. We heard from the Reserve Bank of Australia's Governor, Philip Lowe, this morning, and he's spoken about monetary policy. And during that statement, there are a few things that do work out well, but he's definitely retorted the idea of rates increasing from the 0.1% range where we're at now at some stage this year. That's not going to happen according to Governor Lowe anyway, and we're not going to be seeing it for some time. Reading further into the report, you can find that the RBA targets are as follows. We've got wage growth seeking above 3%. We want inflation to be somewhere between 2 and 3%, but preferably closer to the 3% line, and employment as low as in the low 4% range. Now, there are a couple of issues with this that I see straight off the bat. First thing is, back in 2007, 2008, during the mining boom, we had full employment at our lowest level of 4.2% unemployed. So that's some pretty good figures for Australia. And wage inflation at that same time was 4.5%. The economy, though, at that point in time was effectively overheating. We had just gone through the GFC, we had lots of government stimulus support coming out, at least from the fiscal side of things, and of course, we had a big amount of population growth going on as well. So really, to me, his statements about trying to achieve some of these targets are almost counterproductive. The idea here being that as inflation rises and your wage growth or the wage inflation rises as well, your general employment figures tend to go with it for a little bit. After you get to the crossover or the median or the happy point, as you would consider it to be, you start to see a challenge. You end up with more people starting to lose jobs whilst inflation continues to rise. In order to meet both of those targets, it's quite hard to target both at the same time. And so his statements today actually make it seem like the current monetary policy settings are meant to be here for perpetuality. Now, obviously, that's not going to work. So perhaps we need to see some more adjustment on the RBA policy setting side of things to see how we can move forward with it. Personally, though, either way we look at this scenario, we are still going to be seeing inflation coming up. It is the topic of the year in my book. And of course, so is getting employment figures down to the right level. Now, at this stage, they're still a little way off, at least in terms of employment. Once we get I imagine the way that this may play out is that once we get to the employment targets in the low 4% range, then they'll likely start trying to target the inflationary side of things. But we don't know just yet. We're going to have to keep an eye on how these things travel out. Now, if there's any questions from today's video, then please feel free to shoot me a message on any of my social medias that you can see above and behind me. And of course, check your economic calendars. Now, I'm putting one up on the screen on the things that I see as important today, but of course, make sure there's nothing that impacts you, so check the calendar as well. And don't forget to like and subscribe this video so you can get more great content from me and ACY Securities in the future. Have a great trading day ahead.